Buyers keep asking when prices are going to fall, and sellers want to know how much more money they can make this year. But these are the wrong questions in the Southern California housing market right now. The real story in SoCal real estate is that we've been stuck in a holding pattern since 2023. Sales volumes below normal, inventory's been shrinking, and now we're starting to see buyers quietly sneaking out to make a move because mortgage rates are easing. This combination could flip the market faster than most people expect in 2026, so we may finally have a change. But before we discuss sales, the median home price madness and inventory levels, let's see how 2025 stacks up compared to the last several years. It's time for the Southern California Housing Market Report. We're going to look at closed sales for the year all the way back to 2018, 2019, normal years, 2020, 2021, crazy COVID years, 2022, still a crazy year, but interest rates went through the roof and they've been high since then. So broken down by county, we can see those normal years. Remember when we had 27,000, almost 28,000 homes closing a year? Well, now we're below 20,000. In some of the counties in Southern California, we're down slightly year over year. But for all intents and purposes, it's been equally flat since 2023. I mean, look at the sheer number that sold in 2021 in Los Angeles. Over 74,000 homes. Just crazy, crazy numbers. Looking at the other counties, we can see that things are very quiet in Ventura. Poor Ventura, not much going on there. We are up year over year and year over year in Ventura. But we can see some of the others were actually down year over year. So again, flat years, 2023 through 2025. What do you expect in 2026? Well, it seems like we can only go up from here, especially as we see something interesting with mortgage interest rates that we're going to show you next. And the wrap up for 2025, looking at the monthly data, December is going all the way back to 2018. We have closed properties going under contract, which is buyer demand, new listings, that's seller supply, tracking all those numbers. This particular chart also has the mortgage interest rate average for the month going all the way back to 2018. And you can see that big drop we had in 2020 into 2021, an entire year of very low interest rates. That's why we had over 74,000 sales in Los Angeles and high sales in 2021. We had low mortgage interest rates. 2022, by this time, the end of the year, rates had actually doubled, more than doubled, which is unheard of for mortgage interest rates to go up that fast, but they did. And that's where we saw the depressed sales since 2023 in particular, when we had a full year of the 6% mortgage interest rates. 2022 was half low, half high, or maybe the first quarter-ish was low, and then as we got to the end of the year, it got high. Now, what I want you to look at is 2025 as compared to 2024 for mortgage interest rate. Even going back to 2022, we can see that the rate is down. So year over year, it's dropped, and we haven't had it this low since pre-2022. So what we should see going into 2026 is if mortgage interest rates continue to stay low sixes, maybe get to the high fives, we'll start to see more buyer demand. Buyers have been waiting for this. And we can see new listings are down year over year. Pending sales are up ever so slightly year over year. Highest pending sales since 2022. And then the number of sold properties. And why is the sold line higher than the pending sales? Well, we're finishing up sales for the year. So the properties that went under contract November and into December, those are closing out, and that's why we see higher sales. These lines are going to flip as we get into the spring season. So you're going to see fewer sales, and you're going to see more properties going under contract. It's just the natural cycle, the natural way that things happen as people start to write offers. Los Angeles, similar tale, up slightly for pending sales, down for new listings, pretty flat for sold homes as compared to year over year. This is an interesting market, and particularly in multifamily, where we're seeing price drops. We're seeing it in single family as well in LA. I had a client who scored a smoking deal on a property that the seller had purchased in 2022 and basically sold for a couple $100,000 under that price. So there's deals out there to be had from those who bought in the peak and now need to sell. Riverside buyer demand has continued to trend up from 2022, and it's actually not too terribly far off of 2018, a more normal year. So that's a market that maybe in 2026 we're going to see it return to normal levels of inventory and sales. San Bernardino, we're up for pending sales. We're down for new listings. So actually have a twist there where more properties went under contract than we had new listings at this particular time. And another one that it might take some time, but we're going to get to more normal levels of sales. Ventura, you're always doing your own thing. Although you do all have more properties under contract than new listings. Is Ventura going to be warming up? We will see soon enough. San Diego, again, trending up in pending sales, and we have our listings down year over year. So interesting to see in many of these cases that the new listings are down year over year, sellers deciding not to list, even though mortgage interest rates have dropped. So we'll have to see how this trend affects the spring buying, selling season. And we're going to see in the Altos research reports that inventory is dropping. We were seeing an increase in 2025 in inventory. You saw it here. But things are changing. Of course, if you're thinking of buying or selling in SoCal, you could always hire your cousin, nephew, sister's friend who just got their real estate license last month, or our team of market data devouring pros. Click the link below. Multifamily, 2+ and larger all throughout Southern California, one of the only places you're going to get this data. We're showing you the monthly numbers going all the way back to 2018. December tends to be, some folks say from a tax standpoint, they're going to sell their property. And we can see that we had quite a few sellers who said that. 69 closings in Orange County, and those are similar to 2020 and 2021 levels for the number of closings. And looking at those mortgage interest rates, you can understand it was easier for cash flow back in 2020 and 2021 when mortgage interest rates were half of where they are now. It's a challenge. We needed some cap rate changes in order to get to the point where it made sense for sellers to buy. And I'll share more about cap rates when we get to the LA data. But we can see pending sales are up, again, strong, like 2021 numbers. And then new listings strong as well. If you look at single family data, it's still down. The multifamily data, it's rallying in Orange County. Now, LA, a unique market because of the rent control, and it continues to be tighter and tighter for landlords. And we do see that the pending sales are up. They're relatively strong, close to normal years like 2018 before we had a lot of the changes that we see in some of the rent control laws, and we had our eviction moratorium and the inability to increase rent for RSO properties for about 4 years. So some of those changes have basically given landlords a bad taste in their mouth. So what is going on in LA for cap rates? Buildings are trading at 7, 8, in some cases even higher. And a higher cap rate means the investor is expecting a higher return, which means a lower price. So we are definitely seeing that all throughout LA, and I might even feature a property or two with just crazy value changes where the properties are actually worth less than 2017 in some cases, which is frightening for investors. Real estate always goes up, right? Unless you've got crazy laws that make it go the other way. Riverside tends to be a more affordable market along with San Bernardino. For investors, they get a good return there. And pending sales are down. That's a record low, but we can see the sales and new listings, those are pretty close to regular numbers. San Bernardino, pending sales are down. Ventura, you don't even have enough properties, although your closed sales are pretty high. Higher than 2018. San Diego, a market similar to Orange County in many respects, and we can see that the pending sales are up. Closings are pretty smooth and flat other than the crazy years. So interesting to see what's going on with multifamily. Again, tough to make these properties pencil unless those cap rates increase. Let's see what happens in 2026. Median home price madness. Hold on tight because we're going to show you what's going on. And no surprises here. Month over month. This is the time of year where we see decreases. So we're seeing all across OC, LA, Riverside, month over month for single family homes, a decrease in the median home price. Not a shocker. Now, year over year, OC is flat. Exact same number that we had exactly a year ago for the median home price, factor in inflation. That means the lost value. LA County's down 2.7% for single family homes. and Riverside is up 0.5%. So not dramatic year-over-year increases. But what's interesting, remember what we said about mortgage interest rates year-over-year? Those are lower. So payments for those who bought in December of 2025 are theoretically lower than those who bought in December of 2024. Let's see where payments go in December of 2026. Now let's check out the condo data for these counties. Condo data for OCLA Riverside, and surprise, look at that big drop we have in OC for the condo prices. But what's up, Riverside? You actually are up month over month. That's atypical this time of year. How about year over year? OC's up 0.1%. LA's down 4.1%. Remember we talked about price drops in LA? Yes, that's a real thing, and that's been going on. May reverse as we get into the spring buying selling season because mortgage interest rates have dropped. Riverside's up 6.7% year over year in the condo price. So that is actually a healthy increase, almost too healthy. San Diego for single family homes is up slightly. And we could see that San Bernardino is flat for homes. We've got our telltale typical time of the year drop in Ventura for the month over month price. Year over year, San Bernardino is flat, so 0%, same as it was last year. Ventura is up 3.2%. San Diego's up 4.9%, so that's a big increase. So these are some places, particularly San Diego, where the monthly payment year over year would probably be around the same because we have the increase in the median price. At the same time, we had the drop in the mortgage interest rate. So payments probably pretty flat year over year, but let's keep tracking that. But first, what the heck's going on with condos there? Finishing off with the condo data for median home price madness, and we have an increase in San Diego and Ventura for the condo price month over month and a drop in San Bernardino all over the place. So San Bernardino up 0.3% year over year, Ventura down 0.8%, San Diego up 2.5%. Look at that number there in San Diego. Some may not want that price. Where are they headed in 2026? You're going to find out here first. Altos Research Reports, you love them, I love them. Make sure you're subscribed to them so you get these delivered to your email inbox. Starting at the national level, and we'll filter down. We can see nationally market action index. So this is the absorption rate. It's a slight seller's advantage right now, which this time of year, there isn't as much demand, and so that's why we're seeing it's a slight seller's advantage. That could change as we get into the spring busy season. Inventory went the other way. It is higher than it's been in years past at the national level. So remember, we're looking nationally because you're going to see something different in some Southern California counties. And then we can see our new versus absorbed, important metric to continue to watch. And we're going to see the days on market start to go down as buyers wake up and decide they're going to write offers. Moving on down the scale to the big old state of California market action index, slight seller's advantage, but it's a higher seller's advantage than we saw nationally. Inventory has turned and dropped and is at a level similar to 2025 and 2023. Moving into Southern California counties, starting with OC, strong seller's market. That is unusual for this time of year to see it already be a strong seller's market. Inventory is lower than what we had last year and in 2023. So low levels of inventory, plus we've got those mortgage rates where they are. We could start to see much more of a seller's market here. Los Angeles, slight seller's advantage, not too different from the state. Inventory down, about the same as those other years we've discussed. Riverside, slight seller's advantage, inventory down. You're recognizing the trend here? San Bernardino, slight seller's advantage, inventory down, lower than last year. Interesting to see where inventory is lower than last year. Ventura, slight seller's advantage, inventory down. Might even see a rally there in our lovely favorite place, Ventura. San Diego, to round things out, slight seller's advantage, inventory down. And we're going to start to see days on market go down. What do you think is going to happen? Are we going to have a buyer's or seller's market in the beginning of 2026? It's going to get crazy, I can tell you that. Now that you've analyzed the housing market data for Southern California, you're not going to want to miss this next video right here.